So you think you are ready to trade? Make sure to watch this video to learn how you can go about setting up a Forex account so that you can start trading currencies. We'll also mention other factors that you should be aware of before you take this step. Opening an account. Trading Forex is similar to the equity market because individuals interested in trading need to open up a trading account. Each Forex account and the services it provides differ, so it is important that you find the right one. We will talk about some of the factors that you should be considered when selecting a Forex account. Leverage. Leverage is basically the ability to control large amounts of capital using very little of your own capital. The higher the leverage, the higher the level of risk. The amount of leverage on an account differs depending on the account itself, but most use a factor of at least 50 to 1, with some being as high as 250 to 1. Check the card on the right side of your screen to know more about leverage. Commissions and fees. Another major benefit of Forex accounts is that trading within them is done on a commission-free basis. This is unlike equity accounts, in which you pay the broker a fee for each trade. The reason for this is that you are dealing directly with market makers and do not have to go through other parties like brokers. This may sound too good to be true, but rest assured that market makers are still making money each time you trade by using the spread between the bid and the ask. Other factors. There are a lot of differences between each Forex firm and the accounts they offer, so it is important to review each before making a commitment. Each company will offer different levels of services and programs along with fees above and beyond actual trading costs. Also, due to less regulated nature of Forex market, it is important to go with a reputable company. Thanks for watching.